Half-year reports, guidance updates, and a strategic acquisition are the three major moves on the ASX, and today we're covering them all. Get ready because we are going to show you exactly where buyers and sellers are making their move. To me, it's in an interesting place for right now. Do you buy it on this good news or do you wait?
This is a phenomenal stock. Putting this one on my watch list, definitely I'd be watching it closely.
This bad news here could spell opportunity. We've come off a severe correction. You're at a critical level. You're going to know a lot more very soon on whether this stock is bullish or bearish. Volatility means opportunity, so strap in. Welcome to Wealth Within's Hot Stock Tips. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. Joining me today is Wealth Within graduate and Blueberry Markets Head of Premium Sales, Zoran Kresovic, and I'm Senior Analyst Philip Tortevsky. So let's dive straight in. Good afternoon, Zoran. Thanks for joining, mate.
Good afternoon, Phil. Thank you for having me.
All right, so first up is Elders. Now, they announced their half-year report today. So I want to go and take a look on the screen and show you that report because it was a bit of a tough one. Profits fell over 50%, revenue dropped 19% due to seasonal conditions that hit the company hard, but they're still paying a dividend and kept the full year guidance steady. So now before we get to the charts, Zoran, just a quick brief on what has happened with Elders today. Obviously, not a great result, but not the worst given, still long term, they will be, projecting a good guidance moving into 26 and paying that dividend. So thoughts on that announcement today?
Yeah, I mean, look, overall, I guess the positive is, as you mentioned, that dividend component will still be paid for investors or people that are actually holding the stock at the moment. So that's good news, I guess. Could be a little bit better as well, because obviously the REIT stocks out there that are paying potentially a way higher dividend based on their performance and also half-yearly results as well. So, I mean, if you are stuck in this stock itself, then you need to take into account or consideration factors such as the current price, and you got to have a really solid plan moving forward because the stock isn't actually doing too well at the moment when it comes to the actual price analysis or charts itself, whilst it did have a recent pullback. And I would be actually trading or holding this one with a lot of careful approach, if I can say it that way.
Yeah, absolutely. Now, before we get to the chart of Elders, we do have a fantastic tech company coming up soon. So stay tuned for that because they've come out with an acquisition, which is the biggest in their history. But let's now get to the chart of Elders and have a good look there for you because, I mean, I mirror some of your comments in terms of right now you're looking at a situation purely from the technical point of view where the stock is, if I zoom at our big picture monthly, you can see clearly that we've come off a severe correction dating back from the 2008 GFC. And the stock, although showing now signs of recovery, and that is why it's important to zoom into what we're seeing now, it's still very early days. So, still paying a dividend after a severe correction like that. What I find most interesting is this initial $5.43 level where my mouse cursor is, or 5.50. Since 2019, we've bounced off that level twice in the past, now approaching it a third time. So I believe with Elders, when it comes to the technical aspect of things, we're there to know what the future holds at a critical level. And that's what's exciting to me. You're at a critical level. You're going to know a lot more very soon on whether this stock is likely to be bullish or be bearish. Now, we've obviously come off that short-term or medium-term downtrend from April 2022. But if this stock can hold, this will be the third time it's held $5.50. And if it can get its head above this momentum line around $7, we could very well be seeing a significant low or a base being placed in this market at $5.50 for Elders. And to me, that's an exciting opportunity. Obviously, we've got the trend line on the weekly chart there that the stock hasn't broken yet. So that would be another marker, and I'll get you to have a bit of a chat on that. But, if I just go back and zoom that a little further, you can see that $5.50 level, big resistance back in the past in 2017 and 2010, now acting as support. A lot of people that come and study with us, they would know these types of movements and unfoldings in terms of price and how that previous resistance happens to be support in the future and where this stock is likely to head I see $9.50 and also $13 as potential resistance levels. So an opportunity if this one gets going for the short, medium term play quite soon. I want to get your thoughts here, Zoran, on the actual chart and if you're seeing something similar or something different.
I'm seeing actually very, very similar to what you're seeing, to be honest. I think the key here is the most recent low. Having a look at it both on monthly and on weekly charts. So that March, April low in 2025 is actually providing a key level. The reason for that is because the major trough is actually higher than the prior low back in September, October 2023. And I think that's a great starting point. I also think if you're a student of Wealth Within, this is a phenomenal stock for a number of reasons. If you actually are covering all the modules, whether it's 1, 2, 3, or 4 or 5, because it incorporates a lot of pattern. It's got also momentum, what you mentioned previously, as in trend lines, and also it's got some key support and resistance levels. I think the price that we've seen from the March, April lows in 2025 till now, that could have been back on the, obviously, news as well. I think that, if we can break that $6.60 to $6.70 and hover or go around $7 level mark, then I think we can potentially see this stock actually start to creep upwards again. The key levels, as you mentioned previously, would be around $9, $9.50, and then following through if we can break that towards that $13.5 to $14 level mark. So look, I'd be putting this one on my watch list. Definitely, I'd be watching it closely. I'd have some strong rules around entry, absolutely, because still the overall trend is actually down, starting back from 2014-15, and also from recently 2024 September, October highs. So the medium and long-term downtrend is still down. Short-term uptrend is actually starting to creep up, and we just need to see a significant break around above these levels. With potentially, eyeing that level of around $9.50 level dollar mark.
Yeah, fantastic advice. I just want to get back to that weekly just quickly and identify one more thing, because everything you're saying there is spot on. You can tell we both come from the same school, right? But going at, May, June, April 2023, you've got big volume coming into that previous low. We're not seeing that just yet. So keep an eye on the volume as well, because sometimes in light of news that, is not amazing or perceived to be great, you might find big legs come out of that following in terms of price, but not just yet for that one. Now it is time to get on to WiseTech, because they've just announced a massive $3.25 billion acquisition of US logistics firm E2Open. Now I want to bring up that actual document there. And on your screen now is the announcement that WiseTech, basically entered into a strategic acquisition of E2Open. Now, this marks their biggest deal ever. It's bold, it's strategic, and it expands their product suite, but it's also fully debt funded, which adds risk. Now, to me, this is a big growth play with long-term benefits, but we could see some short-term volatility. So, Zoran, I'll get your thoughts on this. Obviously, WiseTech, a company that, an announcement like this, acquisition, growing the company, good long-term, if you think, for share price appreciation, adding value. But, these announcements, when they're funded on debt, they can also come with some short-term volatility in the meantime. And we're going to get into the share price in a moment. But just on the announcement today, obviously, it's going to cause movements. What are your thoughts?
Absolutely. Another thing, obviously, Phil, here is when you're acquiring, and taking over other companies and so on, you also have to actually take into account the cash flow of any particular company as well, or existing one. So if they are actually doing this with a lot of debt, then you got to actually have a look at the fundamentals quite closely and see how much upside and potential value there is in there. And at some point, it's probably going to affect the share price as well. So things that I'd be considering is like PE ratios, earnings per share or EPS, etc. I think in this particular instance, what we're actually seeing is quite a bit of upside on the stock. The stock has actually been quite well for a long period of time. However, there might be an expectation to actually do some sort of capital raising as well, which means obviously diluting the share price or existing share price, and also getting an entry or providing value to investors to actually top up at the cheaper prices. So all this has to be actually taken into consideration with stocks like this as well. And one thing that I would actually put a lot of emphasis on is the debt. You really want to make sure when you're investing in analyzing stocks that if there is quite a significant amount of debt, that basically the cash flow component is actually quite healthy, and making sure that that can be actually serviced at any point in time.
Yeah, it's a good point. Those capital raisings don't have a good effect on the share price more often than not. But anyway, let's get to the chart and have a look what is going on with WiseTech. And, if we bring it up on the screen, obviously it's very clear. You look at the monthly chart of WiseTech, you can apply this beautiful trend line, momentum line following the stock, but you can clearly see since inception, this stock has found ways to continuously find higher prices. And that is through growing the business. That is through, providing confidence to shareholders that it's worth more than what it's been in the past. Beautiful uptrending stock. But to me, it's in an interesting place right now because it's come off its biggest correction to date, the one being from October 2024. Sure, the one back in 2019 might be bigger in terms of percentage-wise, but given what has happened following 2024, it is the biggest correction down through there. We've seen buyers come and pick it up basically almost exactly on that momentum or trend line, which to me spells a bullish case scenario. But the way the stock fell down in February 2025 with this major down bar through here, that to me is, I guess, the question mark now in terms of do you buy it on this good news or do you wait? And why I say that is because around this time, if you remember, Zoran, there was news coming out about the CEO, getting into some stuff there and not business related. It was personal, but it did affect the business. And so we've got this huge gap now on the weekly chart. And what happened was obviously, like all stocks, they reversed in April. Nice volume came through, starting to rise, but we're coming into this gap. And that to me is where the question mark remains for WiseTech, because what you'll often find, if this stock remains under this momentum line and starts reversing from this area where the gap is, it may not be the best opportunity moving forward, or this may not be the time for this stock to go on and take out the all-time high. So again, it's another stock which sits in that you're going to find out answers very, very soon. And that is what it does from this moment onwards. I believe it's down a couple of percent today, so was Elders. But let's wait and see, because we don't also have any interaction from sellers following this big move up in March, April, May to see how strong they are. So there are a few things going on with WiseTech from my perspective where it's a bit of a caution right now, despite the good news coming out. Your thoughts?
My thoughts are fairly in line with what you're saying. The only other thing that I would like to actually add is that if you have a look at the most recent lows or April lows, when the stock actually hit the 2025 bottom, we can actually see that, the price or the stock was actually sold on quite a high volume. And as the volume has actually reversed and it's starting to creep up and potentially fill that gap, we're actually seeing that, the volume is dropping off. To me, that demonstrates a couple of things. Either the participants or buyers in particular are actually not following through on the price and they don't have the conviction that this is, the bottom. Or the other thing is that, it's just sellers are not actually selling enough at the moment and everyone is still sitting on the sidelines to see whether that, trend line will be actually broken and price will continue to rise. You got to remember, Phil, and we've been taught this in the course as well, is that, generally speaking, if you are a technical analyst and you are looking at the stocks on technical basis, then, the gaps will get filled at some point in price. Yeah. So the pricing on the gaps will actually be completed. And this might be a perfect instance where we're seeing the price actually creeping up towards the 120, 122 level, fill in the gap, break through the downtrend line, but then potentially start reversing and going downwards further. Overall, if I have a look at it on the monthly basis, it looks like the stock has done some phenomenal work over the years. And I'm actually really, really happy with that. The other warning sign that I would actually look at is the low in 2025 has actually broken through the major peaks in 2023 and 2024. That's a bit of a concern right now. That's providing a bit of concern for me right now. Now, not to say that it is an alarming bell and, we're actually starting a new downtrend channel or long-term downtrend on the stock, but at the same time, that would be something that I'd be considering and looking at. Even though, despite the fact it's actually risen above those levels and continuing to actually march upwards, we still need to take that into account when actually looking at the greater picture.
Yeah, very good stuff. And I mean, it's very interesting when you're talking about stocks like this. Obviously, big news, and you often find there are large groups of investors, traders that follow the news when it is favorable for a stock, only to find, if you're not looking at the chart, that it might not be the ideal time to get in. So on that point, I just want to bring up Dale's book, How to Beat the Managed Funds by 20%. This book is free. You just have to pay the shipping on our site there. You can get it. But to that point, obviously, what Wealth Within basically are experts at is knowing the when. You've just seen examples of what are the opportunities out on the market, but it's about knowing when to get in and when to get out. That's going to give you, I guess, that growth potential. We'll be able to lock in those returns and have that consistency moving forward. So please do go and visit our website, wealthwithin.com.au, and go and look at our trading courses under the education tab for more info if you do want to take your trading seriously. Did you want to add anything on that, Zoran?
I mean, I've done the course, I've done everything, I've done the education. It's served me really well on my personal front, but also, industry-wise as well, working within the industry itself. So I'm a great believer in it. I've believed in it all this time, and that's why I've been part of the Wealth Within family and doing, mutual business for around 15 years or so. So wouldn't want to add anything more than that, aside from, obviously, if you're not doing it, you're kind of wasting your time. You need to get in it if you are serious about it, though. If you're not serious about it, then might as well give it a miss. But if you do want to learn and protect your capital first, and then obviously build your wealth from there, then it's definitely the way to go. Great stuff. All right, time now to move on to Origin Group. Now, I want to bring you on the screen there and have a look at the latest news announcement today with Origin, and they've updated their financial year 2025 guidance today. Now, the liquefied natural gas production has been revised lower, and the Octopus Energy profits will be less than expected, but the energy market's outlook is solid, and all FY26 dividends will now be fully franked. So, I mean, when you break this one down, Zoran, I don't want to go too in depth in terms of what it is. Obviously, financial year guidance, it's important because it does paint the roadmap for companies moving forward when you're dealing with the share price. It's a bit of a mixed result. It's going fully franked on the dividend. That's a positive sign. It spells confidence. In terms of the natural gas and the energy, yes, it's taken a bit of a hit, but the outlook moving forward is looking brighter, especially if we can get this tariff situation under control. But that being said, we're going to get into the share price shortly because the share price has been doing amazing things for Origin. So just quickly, thoughts on this report, good, bad? Mixed report with a solid outlook in terms of medium to long term. I think that's reflected well within the share price. I actually do remember this stock and backtesting it back in the days when I was a student at Wealth Within, and I thought it was absolute dog's breakfast. But looking over the last few years, in particular since 2020 lows and COVID crash, it's done exceptionally well. So, the stock is done really, really well. But look, in terms of the sector itself as well, it's something to consider when you're actually investing as well. Because, I just skimmed through the report as well, and it says, the unseasonally warm weather, in UK in the month of March and April have actually caused, some concern and growth, in terms of the Origin's performance, in terms of the actual consumption of energy. That's obviously reflected in the share price as well. So because seasonal aspects are so important and it's affecting the share price potentially so much, it could be a stock that's actually fairly more volatile than some others. And this is important to take into consideration when you are actually trading or investing the stock in itself as well. So it's important to actually know what you're getting yourself into, and then minimizing those emotional decisions as well, and understanding there is a normal part of the cycle of the stock as well when it comes to this sector.
Yeah, absolutely. All right. Well, how about we get onto the charts, because that's the exciting bit here, and see whether or not, this bad news here could spell opportunity or not. And I'll let you take it away. I've been in control the last couple. Let us know your thoughts on the share price, because we're coming into some serious resistance at 1160, aren't we?
Absolutely, we are. I'll start off with the monthly chart first, and I'm seeing a phenomenal upside run from March lows in 2020. We can see that some key levels have been actually significantly broken around $8.60. That's gone further up to test the 1160 or 1150 round number, which is fantastic because that's provided quite a bit of resistance in 2015 as well. Now, what's interesting with this stock, Phil, is that whilst the price actually has hit the $11.50, 60, it has actually got sold off in April with tariffs, and it's actually come back to test the previous resistance level or now support at $8.60, and it's bounced off quite strongly off that, and it created a major higher trough, and it's actually just on the touchline of the uptrend line, which is going back from 2021. And it's so important to understand how these things actually sync. And when you know what you're looking for, it gives you a great roadmap in terms of actually how to go about actually trading a stock. And what we're seeing right now is something fantastic. The stock is actually, bounced up quite strongly off its lows. It's about to test that, 2021 January or high, and both on monthly and on weekly chart. It's actually traded sideways or consolidated for quite a strong period of time. On weekly chart, 1110 seems to provide quite a bit of resistance. It's broken through. It hasn't closed above it, and we hope it will by the end of the week, which will be a strong monthly close as well. And then we're actually marching on to test the $11.40, $11.50. If we can break that level and we can continue going upwards, then I think the next point on the chart is $14.30, and that could be substantial upside on the stock itself. And I think this stock could potentially do something like that, as long as the fundamentals do align up and there is a fair bit of interest coming into the stock as well. We could potentially see that further long-term uptrend continue, which could provide some great opportunities for investors to trade.
Yeah.
What are your thoughts?
Yeah, absolutely. If we just stay here on the weekly chart, to me, let's start off. The 1160 on the monthly, to me, it's the most significant price level on this stock in its recent history. So until we break that, I'm going to call that, this could be the, short to medium term limit for Origin right now, in light of what's come out as well. So I do need this stock to get above 1160 and get above strong to be more confident of the rise up to 1430. And like you rightfully mentioned, if we go dating back to 2024 June, really we had this couple weeks sharp spring up and then the stock fell away, but we failed to close above $11.10 really for a very long time. And even in the last 3 weeks, we've tried 1, 2, obviously we're not at the end of the week yet, being on a Tuesday, but if we fail again, that's 3 weeks in the last month that we failed to close above 1110, following a 1, 2, 3, 4, 5, 6 week run up straight. So I do expect some short-term selling to come in here, something along the lines of this. Now, if we get the selling coming to about 1060 or around that $10 level and start to reverse back up, then again, it's the test of what it does around this 1110. So as long as we hold under there, I'm not super bullish. But if we fall and continue to fall and start taking out that $9 or even get below $8.60 where the next level of support is, big support, then I would be changing my tune for Origin to a more bearish stance. But right now you can't fault the trend, right? You got to ride the trend. The trend is your friend, but we need the confirmation. We're not seeing any of that yet. So that's all I will add on Origin, but one definitely to watch out for. Now, if you want more hot stock picks, check out our video, 3 ASX stocks with massive upside.